Teije. I got that right. Yep. Co-founder of Koia. So hi, Iris. How are you?
Hey, I'm good. Thanks so much for having me today.
No, it's a pleasure. So let's jump right into it. So could you tell us a bit about your background and how you came onto your blockchain journey?
Sure. So I'm one of the co-founders of Koia. So we're a platform to enable anyone to trade, collect, and buy fractions linked to iconic assets such as watches, whiskey, Pokemon cards. Obviously, I'll tell you guys a little bit more about that later. But in terms of my background, I've been in fintech for the past 6-7 years. Prior to founding Koia, I helped build a digital bank called Neat, based out of Hong Kong. I was the first employee there, so I helped the founders grow that business. And obviously, that was within the fintech industry, so I have experience in that and in startups. But the whole, blockchain journey and the journey into Web3, it's still relatively new for me. So for us in Koia, how we landed on using blockchain, it was really because it fit what we wanted to do. And I think that is really important. Sometimes you see projects that are using blockchain, but you're questioning like why, or maybe it doesn't always make sense. But in our case, it really, really made sense for what we wanted to do, because what we're doing is we're fractionalizing physical assets. We're using NFTs, non-fungible tokens, to link to these assets. And that is really the best way to enable that fractionalization. It's very scalable. It is obviously traceable, being on the blockchain. So for us, it's really a decision that made sense from a technical perspective, and that is why we sort of decided to go that route. But that being said, I would say I'm still pretty new to the space. But also for anyone watching that is interested in perhaps transitioning into the crypto or blockchain space, I would say a lot of skills are very transferable. Obviously, if you are a smart contract developer, that's very specific. But so, for example, my background is more in business development, marketing. The channels might be slightly different, but still a lot of the skills are very transferable, similar to if you've got perhaps a product management background or an operational background. A lot of those skills are very transferable.
So after your years of working in the fintech industry and in, business development and marketing, what would you say your key skills or like takeaways are from working in this industry for so long?
I would say there's a few things that are really applicable across, my previous business and my current business. The first thing is really doing proper customer research, user interviews, really understanding what people want and not just building something because you think it's a good idea. I think that is really important, that is applicable across any sort of startup, whether that's Web 2, Web 3, doesn't really matter. And that's something that I've been doing and spent quite a lot of time on in my previous company and also in my current company, especially in the first couple of months when we were still kind of exploring different directions and, different product directions, different asset classes. So that's really important. Secondly, across marketing, I've got quite a lot of experience when it comes to like analytics, using data. Again, that is something that you can use regardless of sort of the company that you're in or the specific product that you are marketing. And lastly, like in my previous role, I spent a lot of time on partnerships, and I would say again that is extremely applicable in my current company as well, even though of course the type of partner or it might be a little bit different. Let's say my previous company, we were targeting SMEs. So I would partner with other companies targeting SMEs. It could be like an accounting software like Xero, for example. In the current company, of course, it's slightly different. We're targeting more retail investors. So I might work with a retail investment app or a podcast that is targeting retail investors. But again, it's all about partnerships and finding the right people and companies to work with to target your audience.
Perfect. Thank you. So you were talking about, assets and alternative assets. Can you explain what that means to you?
Yeah, sure. So alternative assets obviously is a pretty broad term. It can mean anything that's not stocks or bonds. So it could be real estate, probably the most well-known alternative asset class. But in our case, what we are focused on is very much physical assets, starting with collectibles. So the specific asset classes that we're starting with are watches, whiskey, and Pokemon cards, because that's where we've seen a lot of interest from our audience. Potentially also adding art into the mix. But we could look at any sort of collectible assets. In the US, for example, sports memorabilia and trading cards is getting extremely popular, or has gotten it was already popular, but it's gotten even more popular over the past couple of years. What we're starting with is really these collectibles. It's a huge market by itself, around $400 billion annually. So that is those are really the kinds of assets that we're starting with. And what is really exciting about these assets as well is that these are assets that it's not just a financial asset, it's something that people are passionate about. And that was really one of our starting points with Koia, is that everyone has a passion, whether that passion is music or watches or Pokemon. But up to today, only very few people, only the richest people, have been able to sort of invest in these passions. So we want to open up access to these really cool collectible assets to anyone.
Amazing. So, apart from the fact that only the richest people can traditionally, get into this market, what are the other problems with alternative assets at the moment? And how does Koia fix these problems?
Yeah. So as you say, the first point is around the value that's just too high for most individuals to get in as one person. Let's say, for example, we've got a Rolex watch drop coming up. That watch is the current market value is around $33,000. So of course, most people can't afford that. That's where our fractionalization proposition comes in. So instead of having to have $30,000, you only need $100 to buy one fraction. So that's the first and one of the biggest, USPs. But then also beyond that, there's also a couple of other challenges that normally come with these alternative assets that we're looking into. For example, the first one is authentication, which is something that we take care of. And then secondly, it's around storage and insurance, because with these kinds of assets, you need to think about, is it stored in a secure place? In our case with watches, for example, we put it in a safe to deposit box. When it comes to whiskey or wine, you also have to think about the right temperature, the right humidity. So all of these conditions have to be right in order to preserve the asset in its proper condition. So those are all of the other sort of hassles that we take away for our users.
Amazing. So let's say someone buys a fraction of the Rolex, let's say. Can they sell that on as well?
Yeah, so we are using NFTs to enable the fractionalization. So because it's an NFT, people can sell that NFT on NFT marketplaces, for example, OpenSea. So we've built our technology on top of Polygon because of one of the reasons being the low transaction fees. If a user buys an NFT from Koia, they could immediately list that on OpenSea if they wanted to resell that. However, we are also looking at building our own secondary market, because we know that even though OpenSea is huge, still the majority of the population has never bought an NFT, and there's a bit of an onboarding and there's a bit of a journey there. So we also want to make it really easy for people who've perhaps never bought NFTs before to just resell it within our platform, but that will come in around 6 to 9 months, so a bit later in the year.
Okay, well, I'm excited to see what comes up there. So Iris, where are these fractions kept?
Okay, so just to be clear, there's a distinction between the underlying asset and the fraction. So the underlying asset, for example, a watch, as I mentioned, that is kept in a secure location, and we manage that. So if someone would want to sell something to us, we would authenticate it and we take it into our custody just to make sure that it's safe and it's insured. Then when it comes to the fractions, those are the NFTs. So the NFTs, the user who buys that NFT owns that NFT, and it's held in their wallet. So that could be, for example, we allow users to connect their MetaMask wallet. So if they buy this fraction from us, that NFT would be in their wallet. So that is sort of how that process works.
Amazing. And is it just MetaMask, or can you
We've got quite a few options. So we're using Wallet Connect. So it's compatible with most wallets, and also, as I said before, because accessibility is really important to us. So even if a user has never used a crypto wallet before, we also have a mechanism where the user just inputs their email, and then we create a wallet, a non-custodial wallet for them with our partner, so that the user doesn't have. So it's really easy for the user, even if they haven't interacted before with Web3 applications.
So can you talk a bit about the collector token and what kind of role it will play in Koia?
Yeah, so we do have plans to potentially launch a token in the future. However, there's still a lot to be sort of planned out in terms of what that would look like. We don't want to launch a token just for the sake of it. We only want to do it if it really makes sense and if the users really get benefits from it. And we don't want to just launch a speculative token. So we really want it to make sense. We really want that token to have utility. So for that, we need to get a little bit more data to really understand our community and really understand what they care about. We've got a couple of ideas in terms of what the community could get out of the token. They could have, for example, one of the things that we're really excited about is to have our community have a bigger say in what kind of assets we're sourcing, and potentially have that be completely community driven. So let's say a community member sees that there's a cool auction coming up. They could list that on the platform, and this could be like a real live auction with, let's say, Christie's or Sotheby's. They could list that on our platform, and other users could participate in that auction. So we could group it on that auction. So we really want this to be very user driven, and then of course the tokens could be an incentive to drive that user engagement. But it's a little bit further in the future. So we're currently just really focused on running our asset drops.
Amazing. So it seems to me that it's kind of slightly becoming a DAO. Is that in the plans for you guys?
That is still something that is sort of up in the air. It is an option to move towards a more decentralized model where users, as I said, can have a bigger say in terms of what is going to be put on the platform, what's going to be crowdfunded for. We will always need to have companies as well, just because we need to interact with, for example, these storage locations, and they typically cannot, sign a contract with a DAO. So we'll always need to manage some pieces centrally, but that doesn't mean that there could also be DAOs around crowdfunding for specific assets.
So since launching in 2021, what have been your biggest challenges and milestones that you've hit so far?
Yeah, definitely had quite a lot of challenges, I would say, as any startups, but also did achieve some good milestones. So we started the company around a year ago now. So that was myself and my two co-founders. So my co-founders, one of them, Ben Riazi, is coming more from a tech background, and then Richard Drapery is coming more from an investment and finance background. And when we started this company, we knew that we wanted to open up access to alternative assets. So that was always the plan. We were really interested in this fractionalization and fractional ownership piece. What was really important for us as well is that we wanted to be able to market this and get as many people involved as possible, which of course comes with its challenges. The biggest challenge probably that we faced in this past year was around legal and regulatory setup. I think with any product that is innovative, that's always going to be within fintech, and it's innovative, it's always going to be a challenge for finding out what is the right way to set this up, so that obviously that it's legal, but also that it remains flexible enough and commercially viable. So we looked at many different options, and that took us some time. So, for example, one of the things that we considered is to put each asset in a separate company and let investors buy shares in those companies. This is how some of our US competitors are running their businesses, and these businesses, they started a couple of years ago. So that was one of the options that we considered, but we didn't really like it because, it comes with a lot of operational overhead. If you have to set up hundreds of companies, at some point you'd have to manage and set up hundreds of companies. So there's a lot of operational overheads, and it didn't feel that modern. It felt a little bit old school. So we really wanted to do something that was completely digital. And especially now that we saw so many new exciting projects and opportunities come up within the tokenization, within the Web3 space, we knew that is the direction that we were a lot more excited about. But to get that going and to make sure that everything was legal, that took us some time. So I would say that was a challenge. At the same time, also an achievement once we figured out, okay, this is how we can do it. And this is how we can run this company in a scalable way. That was we were really happy once we finally found that right structure. Also, I would say that the two other things that I'm really happy and proud of are, first of all, we managed to raise a pre-seed round with some really great investors, mostly based out of London. So we've got, for example, Seedcamp as part of our investors, so one of the top sort of seed investors out of Europe. So that is really, obviously we needed that capital to get the company going and to start growing. And also I'm really proud of the team that we've built. We're still a small team, 7 people at the moment, but we've really got the right people, the right skill sets to get this off the ground.
Absolutely. So what's next for Koia?
Yeah, so there's a few exciting things coming up. So this quarter we've got a couple of very exciting asset drops. So we've got some luxury watches. We've got a unopened Pokemon box coming up. But what's more, I would say there's two big exciting things for this year. One is that we want to move to assets that are more and more expensive and more rare. And I think that is where it gets really exciting. If we can list something on our platform that is truly one of a kind or very unique, that even if you have the money, you normally can't get access to. I think that's where it becomes very exciting. And that's definitely what we want to do this year. And secondly, I'm really excited about growing the community, but not only growing it, but really, building an engaged community of people who are really involved in the business. We want to be a community-driven business. And that is something that I'm really excited about building out features and ways for people to engage with us and really have a big impact and say in the future of Koia.
Amazing. So have you guys launched yet, or?
Yeah, so we've got our first NFT sale coming up. So probably once this video comes out, we've ran it. So the product is pretty much ready.
Amazing. Yeah. So how have you found the kind of response to it so far, to Koia?
Yeah, so we're seeing quite a lot of interest. Just because I think one of the reasons is because our project is different. It's new. It's not just another PFP project, for example. It's something quite different because we're looking at these physical assets. We're looking at fractionalization, especially the combination of that is quite unique because there are a few other projects that are linking, one NFT to one asset, but there's not that many doing fractionalization and physical assets. We're really one of the first ones to do that with NFTs. So we're seeing interest from 2 different audiences. One is more the crypto and NFT audience who is excited about, there's something different, something new within, and, an interesting new application of NFTs. But then also what's interesting is that we are seeing quite a lot of interest from people who are passionate about these assets. So we're also doing some partnerships with influencers, for example, or we've gotten some organic, press. Let's say we've been working with some watch-focused Instagram influencers. We've been featured in a couple of watch magazines, and we're seeing pretty good response from that as well. And that is interesting because what I really like about that is, first of all, these communities are really tight-knit and they're really passionate and they really like engaging and talking about watches, for example. But also it's really an opportunity for us to bring a lot of new people into the Web3 NFT space because a lot of these users might not have bought NFTs before. So it's really exciting for me to be able to, bring new people into the space.
Absolutely. And best of luck with the drop.
Thanks.
Thank you so much for watching. If you enjoyed this episode, don't forget to like, comment, and subscribe. Thank you so much, Iris, for taking the time out. I'll see you next time. Bye.